the New York Stock Exchange celebrating AAPI month.
Awesome.
And that ring sounding all the more sweet with today's closing bell at the New York Stock Exchange.
But whatever you do, don't look at the big board because the Dow Jones actually closing the day down almost 290 points. You're seeing there the numbers just settle almost a full percentage point. The S&P 500 and NASDAQ also closed the day, or I should say closed the day relatively flat. The S&P is down more than 0.5%, while the NASDAQ is down also about 0.5%.
Well, Ben Eisen joins us now. He's a banking and financial reporter for the Wall Street Journal. You know, the color red means luck in Asian culture, but not so much when we're looking at the New York Stock Exchange. Tell us what was driving the market today.
Well, regional banks were definitely in the spotlight again today. We are seeing a lot of investor fear take place throughout the week after the failure of First Republic and its sale to JP Morgan. Investors are really taking a look at what is, which banks are kind of look to be the weakest right now, and regional banks have, across the board really fallen.
Look, I think for most Americans, they don't have to worry about the ups and the downs on the stock market any given day. But this regional bank concern now is quite an issue because it continues to sap confidence out of the market. How much uncertainty do you have about the I don't know if it's the stability of the regional banking system or just the fact that things can go wrong quite quickly, and it's a weak spot in the economy right now.
Absolutely. I think, it's important to make the distinction that you're making here, which is that deposits in a lot of these banks have actually stabilized after the kind of panic that we saw in March. We really haven't seen the kind of massive outflows of deposits that we saw then. That said, the stock market really reacts a lot more quickly to these things. So we've seen stocks like PacWest fall a lot. Western Alliance has fallen a lot. Horizon Bank, which had a merger called off with TD, that fell a lot today. This is sort of a knee-jerk reaction from investors, but it is not necessarily, a direct response to any movement of deposits here.
Well, let's talk about the labor market and the overall health of our economy. Weekly unemployment claims rose last week. Obviously, the Fed is looking for a cooling labor market. Do you think that this might be a sign that they might pause their rate hikes after yesterday's 0.25% increase, Ben?
Well, the Fed did sort of signal that they were, moving towards the pause. They raised interest rates 25 basis points yesterday, but they didn't necessarily signal that it was that they were going to raise rates again. And, as you start to see the labor market cool a bit more, that is they'll probably reinforce their decision a little bit. We saw the weekly jobless claims. We have the jobs reports coming up. All the data that we get over the next few days and weeks is all going to sort of inform, how they decide to move.
All right, Ben Eisen, thank you so much.
Thanks, Ben.
Thank you.
Imagine getting paid a few hundred or even a few